Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Thursday, May the 9th. Well, the uptrend continues. Dow up 48, Nasdaq up 16, S&P up 6, and the dollar down 34 cents. So that inverse correlated relationship between risk on, risk off with the dollar and equities is still upon us. So that's something that's a good thing, a good sign to realize. So if the dollar starts to strengthen here, you might have some sort of a pullback or at least a pause in commodity markets and equity markets. So what do we have from here? Well, markets continue to grind higher. We have 14 out of 14 days. We're up 12 out of 14 days. Nothing to say than way overextended. I'm not going to show you too much indicators because it really means nothing. Markets have pushed everything aside and just continue to buy the indexes, ETFs. A lot of the stocks that we trade, and if you were to be behind the screens all day, markets, if the stock were to gap up and or down, they pretty much just sideways consolidate pretty much most of the day with the one move at the opening, and then that's pretty much it. And it gets really boring during the course of the day. So we have literally no fear. Fear is creeping in the markets ever so slightly. The VIX actually hasn't moved in the last 5-6 days of this market. That's been continually to punish the shorts. So what are we looking for? Well, we are officially now overbought in the NYMO, which is the McClellan Oscillator that's in front of you, and we can stay overbought, and I keep saying that in every video. So we are not looking to sell the market here. We don't want to be looking to pick a top, right? We want price to confirm what our indicators are basically telling us. So we are at the first target of 1625 in the S&P. Give or take 7 or 8 points, let's just round it off to 1635 would really be the resistance band. 1625, 1635, and then we would reevaluate it. So I'm looking for probably a tag of that 1635, whether it be today or tomorrow, and then go look into next week and see what happens. Now, next week also is options expiration. We usually have a bullish bias to options expiration, so we might not get a sell-off, or we might not get any type of pullback at all in the next week or so. That could be very well possible. That's why I do not, and I would not encourage anyone to go out and just short the market here. It's just crazy to do. The markets are totally insane. 25 years doing this, I have never seen a market just continually just move higher. And as you can see here, just looking at the SPX from November lows, just grinding higher and still ticking new highs. Uncharted territory. We have never seen this. We have never been at this level before. And why? Because the Fed, not only just the Fed, but worldwide central banks continue to ease and reduce rates, interest rates, and make them at historic lows. Just alone in the POMO auctions on yesterday, I mentioned $3.84 billion was pumped into the equity markets. Without the Fed, we would not be at these levels, and that's what's a scary sight. And the Fed should realize that. However, they just continue to pump money in. Why? Because the economy is not where it should be. This market should not be where it is, obviously. Again, this is just my comments, nothing actionable to trade on. And again, I just trade on what price tells me, but just want to make that clear. Once the Fed starts to relinquish its asset purchase program, you're going to see a pullback in equities, because right now, market participants, traders, investors, they're buying the market based on what the Fed is doing. And if the Fed starts to pull back its reins and we see inflation, you have to look out below, and that's going to be the real key driver here. Take a look at our commodity block currencies: the New Zealand dollar, the Aussie dollar, Canadian dollar. Pulled back real nicely yesterday, and still is making lower highs. We did have some decent data come out of Australia last night. Nothing really crazy. So as of right now, it looks to be selling rallies in the commodity block currencies are the way to go. Now, let's get into equities. I just want to show you a few things. Take a look at copper. Copper had a real nice catch-up on from where it was last week. So Copper doing well. Copper starting to break out, but we are still below this resistance lower trend line of this symmetrical triangle. Needs a lot of work, and right now it is reading overbought. So copper tagging the 50-day moving average. So nice move in copper. However, the markets are extremely overextended, and again, I would not be, if anybody's looking to add their positions, if you're a long-term investor, I would not be looking to buy here. I'd be looking for a pullback to probably 3-4% before any additional purchases on your positions. Other than that, I would just hold tight, tighten your stops up, because we could get a sell-off at any given day. Right now, it's not in the cards. I don't see it. I think the markets are totally extended, so we could get a move lower at any given point during the course of the trading day. All right, so let's take a look at the tick. Tick actually now at these sell levels here, as you can see, where we had every time we get above the 400 to 660, 700, markets usually pull back. And as you can see here, this is another area to say, hey, might be using a little caution. But again, the markets don't care. The markets haven't cared about any indicators, any overbought readings. They just continue to grind higher, as you can see here. So we have pushed out just the last 5 days, we have rallied from 1600 to 1625. Actually, below that was 1580, I believe. And we have rallied all the way up here without a break. 12 out of 14 days. It's a little unusual to have something like that without at least some sort of a pullback or a consolidation. All right, take a look at the VIX. And as I said, well, is there fear creeping in the markets? Well, the VIX is not going down anymore, while the markets have exploded to the upside. So that tells me that the option market is pricing in put buyers, so meaning that fear is coming into the market. Otherwise, I think the VIX should have been below 11 at least the last 4 or 5 days. Okay, and let's take a look at the CBOE. Same thing. Did close bullish, but not what I would have liked. What I would have seen if this market was at all maybe down at the 1500 level. Some of these spikes here are really, really bullish. Well, we did close below that area, so it is bullish. But again, guys, you could see that the options market's pricing in that fear is creeping into the markets. Take a look at gold. Keep an eye on this, and I have the weekly chart on here, guys. This is going to be a trade if gold breaks that 1444 on a weekly basis. We're only about 30 points away. We did manage to break higher in gold. I think gold is still going to be a trade to the downside. Keep an eye on your levels. 1444 is really going to be the key level. Once that breaks and margin calls get initiated, a lot of the weak hands are going to have to sell their gold, and that's when you're going to have a big flush lower, probably to the 1250-ish area, 1300 area. But we'll see. Take it one step at a time. All right, let's take a look at the charts here. At resistance, blew through it, 1625, 1635 is going to be that band of resistance that we're looking for. I'll just put this up in this area right here. This is going to be the area where I would suspect that the markets are going to hold in this area. All right, give or take 7 or 8 points, we'll round it off to 1635. So if the market starts to break back down below this yesterday's low of 1623, even 1625, then we probably have some sort of a movement down to the 1600. Then we would reevaluate. As of right now, without a catalyst, I don't see a deeper pullback in equities unless something happens with a geopolitical event or, God forbid, some sort of disaster happens here. But anyway, I don't see this happening at the moment. So let's just keep an eye on it. Again, we are very, very extended, as you can see here. At 25 years doing this, I've never seen anything like this. We gap up, we just grind higher all day. No volume, slow grind higher, and selective stocks are running, actually. Some of the big cap techs are running. A lot of the larger stocks that I don't trade, which puts me at a disadvantage, obviously, because you're just sitting there waiting for something to happen. But nonetheless, the markets are moving higher. ETFs are moving, and that's something that's a good thing. It's a positive. Okay, Spiders daily chart. As you can see here, we are at the upper end of this uptrend line. As you can see, we have tagged it. And now we'll just basically, it's a wait-and-see mode and see what happens. I think that the markets can probably push a little higher and then start to really reverse. I mean, aside from the Fed, you have all of these buyers that are coming into this area here. You have to really be practical and realize, saying, how much more room do you still have? How much more buying is there? Again, of course, with the help of the Fed, you're going to have continued pressure pushing up in equities. But at one point in time, somebody's going to have to take a profit. But again, just again, wait and see mode. Your management plan, your risk plan should be taking hold right now and saying, okay, do I buy up here from this just a 5-day move up, or do I wait for some sort of a pullback? And that's really prudent to wait for a pullback. Okay, 60-minute chart just to show you what's going on here. We had that head and shoulders that actually had that head test, blew right through it, so I took that off. That is invalid, and now we just slowly, as you can see, we're just grinding higher. Take a look at the 30-minute chart. As you can see here, Bollinger Bands are pinching, looking for another big move. Remember, we had a pinch here. We blew up. Now we've been consolidating really for 2 or 3 days with a slow grind higher. Bollinger Bands are pinching. When they pinch, as you can see, if you look at the small candles that are forming, that's just grind mode. And when the markets grind, there's no volatility, and that's very hard for day traders to look and digest to see what's going on. So this is very telling that we are getting a move. We don't know which side the move is going to happen, but again, be patient, because when that move breaks, we should break higher, and we should probably add either way another plus or minus 20 points in the S&P when this move does happen. Could happen today, could happen tomorrow. We don't know. IWM is definitely weaker than the 5 that would follow. One of our leaders. We did manage to eke out another gain, but ever so slightly from the previous day high. So definitely a lagger here, and that's not what you want to see. Here is the transports. Actually, same thing with the transports. You can see marginal gains from the previous day. Again, I'd like to see transports and Russell lead. They are ever so slightly. Really, who's leading is the Dow and the S&P. They are followers to the market here. However, you got to take it as they come. Price is king. Price is what pays us. And here's the diamonds. As you can see here, big move from yesterday, previous day. So the diamonds are moving and the S&P is moving. The other sectors are not really moving as much. Now, we do have movement in banks. Now, we did tag this one area here. This is a big area of resistance for Goldman. Let's see if we get a pullback to this area and then probably a blast off. So bear flag, pullback, bear flag, pullback. We had the bear flag again. Failed bear flag. Now we're probably in bull flag mode. So if you look at it, if you could see here, we did have that small bull flag coming off of the bear flag, and it looked like it was forming, as you can see here, and we just broke right out of it. Now, does Goldman start to bull flag, right? Now, this is, again, only hindsight. We haven't had this yet, but this is what I'm looking at. So we had the flag, bull flag, breakout, bull flag. Now, are they bull flagging up higher like it was here? Bear flag, bear flag, bear flag, bear flag. And then the last bear flag failed, and then we break higher. So that's telling. We don't know yet. This did not happen. But again, watch Goldman for clues. Okay, it's important. Here's the XLF, broke out of this bearish rising wedge, which is not bearish anymore, and we have that broadening top formation, broke out of that, broke out of the wedge. So banks are on the move again, as you can see, and we are just want to get this back down here. Let me just tighten the lines up. It's important. And we are now, if I take this like this, we've broken out, and if you just look at this area here, we could even get another line going here and then really see what happens right about there. Let's take a look and see what happens today. Today we're gonna adjust this line and see off of this top here and see if this is the top and holds, or the market breaks back lower again. So we'll just see. But again, banks are on the move again. I would not be looking to short the banks as of right now. Let's see what happens on the rollover. Here's Apple. Interesting. Now we're getting looking at the pins for next week for options expiration, looking like a 450 pin in Apple, which is really not that deep. It's only a couple, 12, 13 points. Let's see what happens. But we're consolidating here at the upper end of the range, so it is bullish. So we've consolidated here for 3 days. Do we break out? If we take out the 469, 470, you probably will have a beeline to the 500 mark, and we'll see that thin zone that we have here. So if we do take that out, we'll probably run up to the 500. Again, pretty amazing run, 13 days, probably a good 70, 80 points. Market is overextended. Apple is overextended. Our indicators are overextended. We have lack of volume on the move up. Everything is pointing lower. However, price did not break. We do not look to sell unless price starts to break lower. Okay, and lastly is the Qs. Just want to show you weekly spotted Qs. Big bearish rising wedge. We haven't broken it yet, but we're at the upper end of this trend line, and we're still really lacking a little bit in the technology sector at least this week. We're already into Thursday. Now we haven't traded Thursday yet, but with 3 days, and I would have liked to see this at least break out. Here's the daily chart of Qs, and we are way overextended, looking for a pullback at least to the 8-day moving average. Again, revision to the mean, guys. It always happens. Doesn't tell you when, but at one point, price will catch up to the 8-day, and then you would look to reevaluate. All right, guys, that's pretty much it. Be really careful in this crazy market. We could get a pullback at any given point. Don't look to position yourself for the pullback. Let price start to roll over and then really get going. Keep an eye on that gold trade. I think that gold trade next couple of weeks might be forming to the downside. Have a great day. We'll talk to you tomorrow. Take care.